what's up with some of America's worst financial companies? AIG, Fannie Mae, and Freddie Mac are soaring in today's market. Matter of fact, the price of Fannie and Freddie's common shares more than tripled last month in August. So why are investors going berserk over what Bloomberg columnist Jonathan Weil calls the $260 billion black hole? He joins us to help explain or help answer a question that I've heard so many people ask over the last few weeks. What is going on? I
really have absolutely no idea,
well,
and
thanks.
I think that's
Glad
the
to have you on.
Next story. It's like, why did the Utah Jazz not change their nickname when they moved from New Orleans? There's no Jazz in Utah. There's no value in these companies. The $260 billion number, let me tell you what this is. These Freddie Mac and Fannie Mae, government-backed mortgage financiers, seized about a year ago. They give two types of balance sheets because of some deal where they're committing fraud on their accounting. Some years ago, as part of their settlement, they have to give extra disclosures. So they got their balance sheets that tell you one set of values. And those aren't really bearing any resemblance to reality. They give another set of, but they're in compliance with GAAP. They give another set of numbers, another set of balance sheet. It's called the fair value balance sheet. This is where they tell you what the estimates of what the actual real life values of their assets and liabilities are.
Closer to the truth here?
Yeah, well, supposedly, that's the aim. That's the objective. If anything, they're going to be optimistic. If you combine the disclosures from the two companies, the liabilities are $260 billion more than the assets at Freddie and Fannie combined. It's $138 billion for Fannie deficit, $122 billion deficit, negative number for Freddie. And so in the history of these companies combined, they've never made even $100 billion. So there's nothing in their histories to suggest that they have the earnings power, even in their glory days when they had competent management, to make up this deficit.
Wait, so Fannie's up more than 100% since early August. Freddie is up 141% since early August. So why the heck would anyone pour money into this, considering the $260 billion black hole?
I think that people don't understand the difference between common stock and preferred stock and senior preferred stock and debt. They see some.
You may be very right there.
They see some good news that maybe the government stake might be worth a little bit more, but that means absolutely nothing about whether the common stake's going to be worth more. And if you look at AIG's balance sheet, they don't do you the pleasure of actually seeing the fair value balance sheet versus the balance sheet. But if you take away just the unsaleable assets, the deferred marketing expenses, the goodwill, that type of stuff, that it's an asset only on paper. Their common shareholder equity is only about negative $34.5 billion. So you're talking about very deep holes. It's amazing to me that these common stocks trade for anything, or the government even lets them trade.
You know, AIG over the last 4 weeks has tripled in value. I mean, how much of this has to do with Robert Ben Moshe? Because does it feel to you like John Wayne took over AIG?
Yeah, you're not shocked.
I have no idea. Even this guy, or maybe I can't remember. It was some senior executive at AIG recently came out and said that that said that the sum is more than the value of the parts. This is just not making any sense. But I'll tell you, in markets where things start to get a little bit frothy, it's always the worst performing stocks that end up doing the best.
So maybe that's a sign.
The worst performing companies' stocks that end up outperforming all the others. And so if the market started falling apart right now, people would look back on last month and say, man, that was a tell.
All right, Jonathan, always a pleasure to have you on. Jonathan Weil is a Bloomberg columnist. The opinions that he expresses are his own and not necessarily those of Bloomberg LP. Carol and I may or may not agree with him, but we won't say on air.